Hello, everyone. Once again, this is Black Forest coming to you with another market analysis currency breakdown. We're going to be looking at the AUDUSD, also known as the Aussie USD. But before we get started to break down this chart and this currency pair, we have to state that this video is for educational purposes only. This is not financial advice. But we all know why you guys are here. You guys are here to find good, credible Forex content. It can help improve your ability as a trader, and that can help put some extra money in your pocket, especially in these troubling times. Okay, so with that being said, let us dive straight into breaking down the currency before we break down what's happening on the chart. Okay, so we're actually coming into this week with the Australian dollar actually being one of our weaker currencies, and this is just solely due to the same thing that happened with the New Zealand dollar. It started off the beginning of this year actually as one of our stronger currencies, but it ran through all its economic interventions trying to combat inflation at the beginning of the year, which means that they don't have any type of economic interventions they can do to combat inflation now without driving their economy into complete recession. Okay, with this being said, they have to let the inflation run its course through this economy and clean up the pieces after it's finished, which means that it's going to be weak and weak for the near distant future. Okay. Now the U.S. dollar is also starting to gain a more negative news. It also has a lot more negative news coming out of it than positive news coming out of it, which is making it start to slow down its trajectory strength that it has been gaining. But these CPI numbers that's coming out can be a game changer tomorrow, because if these numbers come out as high as everybody thinks it's going to be, that means that the interventions that with the American government and the Fed has been doing to combat inflation has not combated it either effectively or fast enough or both, which means that we're going to see a rebounding, weakening effect of the U.S. dollar that's going to come in very aggressively, especially if the CPI numbers are high, which is looking like that's going to be because of based off the way the stock market performed today. Okay, and based off the prices in the stores in America, if you guys are watching as American citizens, you're seeing that the prices are going up everywhere. So it's pretty much safe to say that we're going to be anticipating high CPI numbers coming out tomorrow. Okay. So this actually makes this prime for retracement. Okay, how far can this retrace back? It can retrace back as far as here, can retrace back as far as here, or it can retrace back as far as here. Okay, but if we start to see big green candles going towards the up position, and we start seeing choppy, crappy red candles going towards the down, towards the short position, then we can start looking at this as actually start judging, well, is this aggressive retracement or price turnover? Okay, but if we start to get green candles coming up and we start to get more aggressive red candles coming down, then we can safely say that the sellers are not done yet and this chart is going to continue to sell off. So we are going to have some retracement, but it's all about how that retracement comes in and what happens after that. Okay, if the retracement comes in with very, very large candles and then the fundamental direction is coming in choppy, then we can start looking at this as aggressive retracement or price turnover. Okay, but if the retracement comes in very, very choppy and then we start going back into the fundamental short position with very large red candles, then it's safe enough to say that the sellers have not left the building and this is going to continue to sell off. Okay, now if you guys like our content, we ask that you please subscribe to our YouTube channel. Subscribing to our YouTube channel will allow you to get up to date information notifications on every time we drop new trading content. Also, we ask that you guys please like and share our videos. Like and sharing our videos help pushes our content out there further than YouTube, so we can continue to build our community of profitable traders. Also, last but not least, we ask that you guys reach out to us by commenting on whatever video that you do watch, so you can let us know what market analysis videos that you guys do want to see. Okay, all you have to do is leave a comment and whatever video that you guys watch, or you can reach out to us by either our email or links to our social medias. Through our social medias, the links to our social medias and our emails in the description of every video, Okay, so we ask that you guys please reach out to us and let us know what videos that you guys do want to see, so we know how to best to accommodate and to serve you. Okay, and with that being said, happy trading.